So we've had another fantastic week this week with the position trading strategies and the market reversal alerts EA. So this video, I'm going to go through the four main strategies that I trade in the live room every day. And we're going to have a look at each one in detail, have a look at the results it's produced this week and how these fantastic results have been achieved. For those of you that don't know, I trade twice a day in the live rooms on YouTube. So I stream twice a day, executing all the strategies and trading all of this live. So you can see all this unfolding every day as we go through the week. So we'll take a quick look at the strategies. First one we've got here is the H4M5 mean reversion strategy. That's produced a measly 1.15% this week. So H4 mean reversion didn't do a lot this week. We didn't get a lot of H4 RSI extensions, unfortunately, but hey, 1.15% is better than a loss. Moving on to the H1 strategy, so the H1M5 mean reversion strategy. This is pretty much the same as the H4, except this one's produced 8.16% this week. Waiting for the hourly RSI extensions and then jumping in on mean reversions on the M5 timeframe. I'm going to go through all these strategies in a minute and show you how they all work. We've got the 5-minute ADR reversal strategy. So this is playing off the back of strong moves intraday, and then we wait for the mean reversion moves off the back of the strong moves that happen every day. We've got 6.98% profit generated off of that strategy this week. And the H1 hedging strategy, which has produced 5.63% this week. So in a grand total, we got 21.92% profit produced this week from all four strategies. So really, really good trading results this week. All of these trades were taken on full autopilot using the market reversal alerts EA, and they're all using position trading strategies that I teach in the Bootcamp, which you can see on YouTube, which is free. If you follow the links, which are scrolling along the bottom of the screen here, you can go and access the Bootcamp, which is all on YouTube, and you can access the market reversal alerts EA as well, which takes all the trades for you. So let's have a quick look at the strategies in a little bit more detail. So this one is the H1 hedging strategy. So all this is doing very, very simply is we're waiting for the market to push strongly in one direction, and then we wait for it to start to mean reverse. We wait for a reversal in structure, a structure break back in the opposite direction, and we basically risk a 0.2% of the account balance on half an ADR's movement, and then we exit after half an ADR's movement in our direction. So it's basically scalping the H1 time frame movements. As you can see, the market moves up and down constantly, and all we're doing is we're getting in as soon as those reversals start to trigger. So this is an always in type strategy and a hedging strategy. So it will just basically get into every single trade opportunity it finds. And if the market goes against us, we take additional positions to get in and obviously get out again. And obviously if it just pushes, as you can see on the screen here, it's taken 1, 2, 3, 4, 5, 6 trades. All of them basically worked straight away. So that's the H1 hedging strategy. We'll look at some of the trades in a minute in a bit more detail, actually on the charts. We've got the ADR reversal strategy here. So this is waiting for the market to move one ADR up or down on an intraday basis. And then when that movement is extended, we just jump in the opposite direction when we get a structure break in the other direction. So as you can see, we basically wait for a reversal to start on the 5-minute time frame. This is using the market reversal alerts indicator. We risk again a 0.2% of the account balance on half an ADR's movement. And then we exit 30% of the average daily range, or 0.25% of the balance, whichever comes first. Usually it's a 0.3 of the ADR, which we get out on. So that's the ADR strategy. The H1M5 mean reversion strategy, very simple. All we're using is the relative strength index. As soon as the relative strength index gets extended to the downside or the upside, we wait for a reversal alert on the lower time frame, and then we jump in on a mean reversion opportunity there. So as you can see here, we've got an RSI extension to the upside, and then on the 5-minute time frame, we get that reversal alert, which is a break in structure to the downside. We jump in and we just basically grab half an ADR out of those trades. So we'll jump over, I'll just quickly cover the H4M5 as well. That's basically the same as the H1 M5 strategy, except it's using the 4-hour time frame for RSI extensions and not the hourly. This one triggers an awful lot less trades, as you saw. We haven't made a huge amount of money out of this week, but it's a much more stable strategy because it doesn't getting to draw down very much. So we'll have a quick look at the strategies in the MT4 terminal. So what we got here is the H1 mean reversion. So you can see all the trades here. These are the trades taken this week. £8,000, well, $8,000 profit on this account. This is a 100K account. And it's produced 8.16%. So I won't go through all these trades, basically. There's loads of them that's taken, as you can see. But you can see, obviously, it's banking very nicely, very regularly. We'll have a quick look at a couple of these trades that have been taken. So we've got one here, the Euro New Zealand. You see one there on the screen, the Aussie dollar, US dollar. So there's one entry there and an exit there. If I quickly show you the RSI, you'll see that we've got an RSI extension above the 25 level, above the 75 level, sorry. And what we had there on the 5-minute time frame would have been a reversal alert. So we jumped in there, price pushed against us, pushed back down again, and exited with half of an ADR in movement. Half of an ADR on this pair is 36 pips. So we just grabbed 36 pips out of the market as it pushed back down again. We'll flick through a few others. Let's move this over to full screen. So you can see another trade we got taken here. So there's an extension on the hourly RSI below the 25 level. We took one entry there, price pushed down, pushed up, pushed down, pushed up. It didn't quite give us half an ADR movement to the upside. So we waited for price to push down. We took a second position and exited 2 of the positions there. Took a little bit of drawdown control on this one. So basically scaling out using that drawdown control to exit the positions when they go against us and then pushing back up. So that's the Aussie dollar CAD. Whiz through Aussie dollar Swiss. There's a short there, hourly RSI extension, reversal alert on the 5-minute time frame, exit with a little bit there, and another one down there, hourly RSI extension to the downside, reversal alert, exit there, which is always half an ADR. Aussie dollar yen, still in this trade at the moment, took one there on the extension, price pushed down, so we've done a little bit of drawdown control, taking a third of that position off. And just waiting basically for that mean reversion back to the upside on that. Aussie New Zealand, a couple of positions here. So we took one long there, RSI extension, 5-minute reversal alert, exit on half an ADR, pushed up, entry on the RSI above the 75, pushed back down, exit down there. Another trade there, entry, pushed down, did some drawdown control, took a second position, exited the 2 positions in profit there. Yeah, so position trading, as taught in the bootcamp, we take multiple positions in line with a direction in the market, and we just wait basically for market movement and the market fluctuations and market structure to move in our direction, and then we exit when we have a profit. So that is the H1M5 strategy. I'll quickly flick over to the next account, which is this one here. So this is our mean reversion. So this is H4M5. So as you can see, there was very few trades taken on this one this week. Very light week. Didn't get many RSI extensions on the 4-hour. So banked 1100 on it. You can see the trades on here. If I go through a couple of pairs, push that down there. US dollar CAD. So let's switch over to US dollar CAD. Whoops, wrong one. This is quite a complex trade. So we got the 4-hour extension there on the RSI. We got embedded a little bit on the US dollar CAD. So as price pushed against, took a second position, price pushed down, took a third position, then exited them all there with a profit. Took 2 small drawdowns on the way. So we took a drawdown there, a drawdown there, and a drawdown there. So 3 drawdown control positions, sorry. And then 4 positions in total to exit that one. So that's a nice little trade there. Let's have a quick look to see some others. We got Swiss yen. That is like a 1 in, 1 out. Yeah, so 1 entry there, 4-hour RSI extension to the upside, out with half an ADR's profit on the drop. Pound US dollar, RSI extension to the upside, yeah, on the 4-hour, and then push back down half an ADR and exit. So you can see what's happening with these. We're basically just getting in on the RSI extensions, waiting for that extreme move the banks have made to complete, and then they take profit on their move. We take our profit when they take their profit. So we're basically scaling in as the banks have made their moves, and we're getting back out as they do their profit takes. Standard position trading, all taught in the bootcamp. So that is the 4-hour RSI extension with M5 entries. This should be the ADR reversal. Yeah, so this is ADR reversals, 6.98% profit on this one this week. So you can see all the trades here on the ADR reversals. Whoops. So loads of trades taken on this, bank 7,000. So again, very similar to the H1 strategy, H1M5 mean reversion. What we're doing is basically with this strategy, if I get into the 15-minute time frame, we can have a look at some of these. All we're doing is we're waiting for price to push hard in one direction and get extended beyond that average daily range. Yeah, so extended it to the upside above ADR or to the downside below ADR. And then as soon as we get down to those levels, what we're doing is we're waiting for that reversal alert to trigger on the 5-minute time frame, which is basically telling us that there's been a shift in structure to the upside. We're jumping on board as the market tends to take its profit on that intraday move. Yeah, so very, very simple strategy. Just using the ADR reversal, the ADR indicator, the ADR reversal indicator, and the market reversal alerts indicator. Over some of these, pound New Zealand. So there's a couple of trades there. We had one there and one there. Those are sell order and another sell order there. One there, out there, pound New Zealand. So in, out, very, very quick strategy. This is more of a scalping strategy. So you're in and out usually within a day, 2 days max. Entry there. So ADR pushed to the downside, entered, took a second position on the next day, exited those there. A little bit of drawdown control there on that one. Aussie dollar New Zealand, so that's one I just covered. US dollar yen. A few examples there. Yeah, price pushed down hard, hit ADR, entered, exited the next day. Again, ADR hit the next day, pushed down, took a second position, pushed up, exited both of those. Euro US dollar. Oops, that hasn't changed. One trade there. So there's an ADR hit to the upside, pushed very, very strong. ADR hit, entered, went to accumulation the next day, pushed up, another ADR hit, exited the following day there. So there's a few examples of the ADRs. And finally, the H1 hedging set file. So this one has done 5.63%. So this is the H1 hedging set file. So this one has been, as you can see, it's been taking loads of trades. $5,600 profit on this one. So the hedging set file is an always in strategy. So all this is doing literally is getting into the market every time there is a break of structure. So as soon as we get a market reversal alerts signal, we just basically get in. Yeah. And we're just using that natural ebb and flow of the market to take a little bit of profit out of the market every time we see a structure shift, basically. So you can see we pushed up hard here. We took a short there, took 2 days to get out of it, came down, we pushed up again, another reversal alert would have triggered there. We took an entry there, out there. So literally just grabbing that quick half an ADR movement. The reason we use half an ADR or a third of an ADR as a target with all position trading strategies is it's easy to achieve. As you can see here, this is our average daily range. The market spends 58% of its time sitting within the average daily range. So it only exceeds it 42% of the time, meaning that if your target is always within an average daily range measurement, you're going to be able to get out of it very, very quickly, usually within a day or two at the most. Occasionally, you're going to get squeezed. And in those situations, we basically scale in, use dollar cost averaging to get into our positions and wait for the market moves to get out. So every time the banks push in one direction, they have to become the opposite direction to exit their positions and make their profit. That's what we're using as position traders to get out of our entries. So as long as we're keeping the average price of our positions within an average daily range, it's very easy for us to exit our positions with half an ADR's target. If we have a look at an example here, so we've got the CAD yen, which has got multiple positions on at the moment. So we've got a couple of buys and a couple of sells, but as you can see, our average prices here are well within the average daily range. So all we're looking for is either a push down or a push up of half of an ADR. and we'll be able to exit one of those positions, and then we'll deal with the other one when the price moves back in the opposite direction. So position trading basically gets you into the market and uses the natural ebb and flow of the market to extract profit on a regular basis. All taught in the bootcamp. Bootcamp is scrolling along the bottom of the screen there, so go and watch that on YouTube. The market reversal alert EA took all of these trades. So I've got a VPS which is running here. You can see all the terminals down there. So this is the ADR reversals. So all the EA is set up to do is basically get into trades when we hit the average, the ADR 100%, and then get out of those trades with a target of 0.3 of an ADR or $250, which is 1/4% profit, whichever comes first. So very, very, very simple strategy, but the EA executes all those trades you've seen automatically for me on my VPS. So yeah, 21.92% profit this week. That's across all 4 strategies, obviously. So that's a cumulative profit. You would only really trade one of these strategies normally on a single account. But yeah, great returns, averaging at around about sort of 10 to 15 at the moment, 10 to 20% profit a month off of each strategy. So really good returns. We're just coming off the back of a March, which saw 68% return across all 4 strategies. So made a serious amount of money in March, the market reversal alert EA. So hopefully you can join me in the live rooms and we can watch this all unfolding live every day, every morning 7:50 for the Frankfurt session, every morning at 2:20 for the New York session. This is UK time. So streaming twice a day. Come and join me there, and hopefully we'll see you soon. Have a good day.